Hello, I'm Debbie Bell Hosking for FinextraTV here in our virtual studio, and I'm joined by Philip Konopik, who is the Regional Head of Commercial and Money Movement Services of Visa Europe. And this is a great opportunity because we can discuss some of the outcomes of a recent report between Finextra and Visa, and it was looking at commercial banking strategies, and it was called Commercial Banking in Transition. So let's focus more on those strategies, and welcome, Philip.
Thank you very much. Great to be here, Debbie.
Lovely to have you here, particularly because we're going to be talking about commercial banking. And
Yes.
historically, they've had a label for not catching up that quickly to transformation, and I see you laughing there, and things are changing. We're seeing a lot more, people are talking about a lot more momentum in this area and the speed of transformation. What do you think are the drivers towards that acceleration?
I think you're spot on. I think the commercial side of the business has always been a little bit more protected. But I think it's important here. What we see now is that in Europe, the shift isn't really coming from a hype or a sudden disruption. It's coming from client behaviors and the demands of those clients changing. And it's actually outpacing the legacy infrastructure that we see in the banks. So for a long time, the European commercial banks, they could afford to move slowly because they had the trust, regulation and resilience was there, and it kind of added real weight to the sort of protection of that ecosystem. And that still matters. It's really important. But I guess what's changed now is that clients expect those strengths plus a modern infrastructure and a modern performance in terms of the services that they get. And that's really changed. And we can see it in the data. So about 95% of commercial banks globally, they said that the speed of the payment rails is already impacting the operational satisfaction of their clients. And in Europe, which is a relatively mature market, as much as 18% report a significant impact on clients. And that's no longer marginal, right? These are substantial numbers. And at the same time, we see that 3 out of 4 European banks say that at least a quarter of their clients are already shifting some funds to other providers. And typically that can be between 11 to 50%. So again, these are becoming real numbers. And it's that combination that's really accelerating the change that we're seeing. So clients aren't actually leaving their banks, lock, stock, and barrel. It's actually a very similar trend to what we've seen in retail banking over a period of time as fintech banks and neobanks have matured. Customers don't leave, but they reallocate funds. They reallocate services, payment flows to places where they get the speed and transparency or the integration that they want. So in Europe, I guess it's more of an optimization rather than a churn. But it is forcing the banks to modernize faster than maybe the traditional pace has allowed them to do. So the driver is not disruption for disruption's sake. I think that's important. It's really relevance. So it's measured quietly but clearly in where money actually moves, and we can see that it's shifting.
Interesting. And I suppose ultimately those two words as well, those phrases you said, which were the customer expectations, but also customer satisfaction. Dictating some of the movement.
Yeah, and it is truly that shift is very clear. I think the customers are voting with their feet. They're starting to explore. They're finding new providers that can fit their needs. And we can see the volume starting to shift, and the bank can see the volume starting to shift. And it's similar to what happened in the retail part of the business, once that wedge is there, once you're starting to build trust with an alternative provider, typically the more services that provider can give you, the more services you place there. So there is a fragmentation it's not a new thing. Like we've observed this trend for a long period of time, and now it's coming into commercial banking in a real way.
And this leads us nicely to competing, really. So what would you say are the top priorities for commercial banks when they want to compete against other payment providers or payment service providers and, of course, fintechs?
Yeah, I think it's important to say that maybe differently from what we've seen in retail banking, and particularly for Europe, that this isn't really a pricing battle, and it's not really a rush to out innovate the fintechs. That this is a combination of capabilities that the clients are really looking for, and we can see that the banks are quite deliberate in where they compete. Firstly, you have the traditional area where banks are strong, right? You have cybersecurity, operational resilience. This is kind of still very much a top concern in cross-border payments. I think it scored one of our top scores in the survey we did, so it was around 4.3, if I'm not wrong, out of 5. So it was ahead of things like innovation and anything else. So this isn't just hygiene. This is the expectation is that you have to be able to differentiate in this space, and that's where fintechs struggle historically and in reality. So this is where banks still have an ability to add a differentiation to the products and services they provide. Secondly, I think it's the pain points that the clients feel. So why are they actually moving away some or substantial part of their business to somebody else? And here banks are reporting that clients ask for cost-effective access to merging and low volume corridors. Like this is a trend that we've seen for a long time. Contraction in correspondent banking, commercial banking, due to the cost of maintaining those infrastructure. And so the ability to get access to these corridors reducing. I think that was about 52% of all banks reported client needs there. And then we had a higher demand for transparency and tracking, which is also a sort of a very traditional thing that's not worked so well. That was about 46%. And finally, it's really the ability to integrate with the new systems and solutions that the clients are working. So ERP systems, ISV systems, and that was about 44%. So we can see the clients are clearly telling their banks, these are the things that we want, these are the things that we need, and if we're not getting them, that's why we move. And I think speed has always been a thing. It's still a thing. It's not a nice to have, and it's a baseline expectation. You got to have the speed. So that's fundamental. And then I think thirdly, the real battle now is about wallet share, right? You cannot expect to hold the full relationship anymore. And I was a little bit surprised by this, that only about 14% of European banks still feel that today fintechs are a significant threat. I was surprised that it's low, although about 70% felt like there's at least a moderate pressure. So I guess it's building. But I think this is these numbers in a year time. I think we will see a significant shift from moderate to significant, and it's driven by the rising client expectations. It's not the price comparison necessarily. It's like, can you deliver all of these things for me in a more convenient way that works for my business? So clients are not walking away. They're unbundling. It's the fragmentation we talked about. And I think finally, maybe this explains a bit the selective approach we've seen in the banks to partnerships with fintechs. Around 60% of banks, they see partnerships with fintechs as an opportunity. Again, I mean, to me, and where we sit in the ecosystem, this feels like it should be 100%. This is sort of really the nub of the conversation and the solution to the challenge that the clients are putting onto banks and onto the ecosystem. So collaboration is happening, but you still see, this legacy challenge of collaborating with fintechs as risky. It's really still there. But if you get it right, then you have the opportunity to improve speed and complement the trust and security that you have as a bank and as a trusted provider with some of the functionality that your clients are looking for. So that's really key. Sorry. And so I think, I don't think banks are trying to beat fintechs now in Europe at their own game. It's more finding that right combination of complementing what they don't have, bringing down the cost of innovation, which is substantial, to really find the best mix of products and services to meet the client needs.
Yeah. And you've spoken about a lot of interesting things there, still the need for collaboration, the shared wallets, all of this. And then you ended by talking about still meeting those expectations of the client needs. So if we have a little glass ball and we're looking a little bit more into the future, how would you say commercial banks are monitoring the market to ensure that they are ready to meet the customer's future expectations?
Yes, and I think here is probably three key things, right? So first one is, what can I see with my own clients? Secondly, what are they actually asking? So what are my clients doing? First one, what are they asking for? Secondly, and thirdly, what are other players doing? Other competitors to us? What are they thinking about the future? Those are kind of the three things. But let's unpack them a little bit. So first off, as I mentioned, the fragmentation. So what am I seeing in my own numbers? And typically here, banks are seeing that about 11 to 50% of flows are already shifting in some specific use cases to other providers. So this fragmentation is happening. So if I can see that in my numbers, then clearly there is an unmet need. Then secondly, what are my clients actually telling me when I ask them what they need or what they're missing? And here, I think it was almost 100% of banks, they received explicit feedback on payment speed and cost. So, if you can't do that better than others, you're going to start losing volume. And then a large proportion also hear feedback on operational demands. And these are things like, corridor reach, tracking, transparency, ERP connectivity, that is coming through very clearly. And it's not just shaping sort of near-term needs. I think this is sort of, we need to solve these things long term. So banks do need the strategy for that. And then finally, the third thing, as I mentioned, is what are others doing? And also, what is the regulation moving towards? And here we can see that about 44% of banks were telling us that they plan limited cross-border investments rather than large-scale transformation. And I think, again, that reflects also this idea or this sentiment towards partnering to complement rather than to outcompete with fintechs. And risk controls, that really remains the top priority as well. So when we look at what banks are saying that they're going to invest in, continuing to strengthen that traditional differentiation between me as a traditional bank, as a commercial bank, versus maybe what a fintech is able to offer. Can I continue to excel in risk, security, and trust around anything related to digital assets, which is more sort of where I would potentially partner. And it's interesting that, because I think what we also saw, that's only about 13% of banks were actively engaging in things like stablecoin pilots. And again, this is also an area where I think I was quite surprised that it wasn't higher. Most banks, I think about a third, were waiting for more regulatory clarity, which again is absolutely needed. But we would expect that the piloting would have been higher. So both in this area and sort of how I view potentially challenges from fintechs and maybe neobanks, I think those will shift quite firmly in the years to come. So I guess if you wrap it all up, I think it's not really, as I said, out competing with fintechs. It's really kind of how do you remain relevant in this world of fragmentation? Is absolutely going to happen. How do you maintain the majority of that wallet share, being trusted, being secure, but still meeting those additional expectations about transparency and speed and cost? So for commercial banks in Europe, I think it's not about moving the fastest, being the first, on the barricade and showing all the new capabilities. It's modernizing fast enough that you can remain indispensable to your clients, but still doing it in a way that reinforces rather than erodes the strengths that you already have.
Interesting. And also, I'm still hearing your words, to complement rather than compete, which is going to stay with me.
Yeah.
Well, Philip, thank you so much. It's really been a great conversation to hear about your point of view on the European landscape. Very interesting. Thank you so much.
My pleasure. Thank you so much for having me.